Hi, this is Brent with Trade Therapy, and welcome back to the Trading Couch. We're talking about Robinhood, our clarity spotlight last week. We're going to walk through the transition that Hood went through from accumulation up into what so far has been a really managed uptrend. We're going to drill down into the weekly and daily charts to look at how institutions have been executing on their plan. The lesson really has been pretty simple. Buy the pauses at support. Don't chase the headlines. That's not uncommon. We talk about it all the time, but Hood's a great example of that. We're going to start with this chart from July. The last time we looked at Hood, we talked about how Hood had spent this extended period of time underneath this resistance level here, allowing institutional sponsors to come in and build up an inventory. And once that accumulation process had completed, price had gone out and then back tested, converting this previous ceiling into now working support, and that gave downside risk a floor right there. You could see volume step in, and we saw price push off of that level until it got up into this trapped supply up here. Once we did see price come down and find support again, we talked about rising volume going into these higher Fibonacci levels. This 1414 and 1618 was the next level that we were wondering if we would see profit taking at. And if we fast forward to last week's chart, this is now October 18th, we see that we did see that profit taking. We do see a sideways drift here back into the shorter term weekly moving averages. That is also a great example of Elliott's guideline to alternation, Elliott wave theory. There is a guideline. It's not a fundamental law of the theory. What that means is that you see it quite often, but it isn't always present. And what that is the guideline to alternation means that these corrective waves will alternate between being a sharp wave down and a flat wave sideways, and a sharp wave down and a flat wave sideways. And we think we've got a sideways wave corresponding to the previous strong pullback here, which means that the next pullback here, it's not absolute, but we should be on our toes for some sort of a sharp pullback into these longer term moving averages. So what we're watching right now is price breaking out above this previous profit taking range here and looking for acceptance over this level. We're looking to see if buyers will step in here and support this level. It can drift back down into this previous Fibonacci level that it retook and test support there and continue on out of this range. We're not really looking for some sort of a vertical breakout here. If we do see a vertical breakout, that does increase the possibility that we'll see a sharp pullback here where institutions will shoot up and take profit, draw in a bunch of retail investors, and then sharply pull back to these longer term moving averages and take them out of the trade as they take profit and reload their positions. So we're going to be watching that very carefully. A breakdown here, if we do see volume come in, if we see sponsorship develop to the downside, similar to what we saw in this downward move here, if we see volume start to come in and push down below this support level, the price acceptance testing would fail, and we would see price come back down into these longer term moving averages, and we'll reconsider our strategy at that point. That's not our primary expectation, although we do see momentum indicators showing bearish divergence. So we'll need to be on our toes and keeping an eye on that as we go. If we jump over to the daily chart, take a look at the daily, it tells a different story than we just got, where we were just talking about bearish divergence developing on the weekly. On the daily, we see bullish divergence developing, and we see signs of continuation, not signs of distribution. So what do I mean by that? What I mean by that is you see these pullbacks are done on very low volume. We read our volume profile here. We can see in the drawdown ranges here, we've got a very thin profile. What does that mean? That means that there's no distribution happening here. There is no sponsorship to the downside. We don't see a lot of volume coming in here, which would indicate institutions were dumping their positions. What we see is a very thin volume profile through this range. What that means is they're selling it off on low volume. There's absorption happening here. The acceptance testing that we're looking for to hold this prior high so far at least appears to be holding. This chart is from Friday of last week. Today is Monday. We're up slightly. We're right around this area right here, testing the shorter term moving averages. So what we're looking for is we're looking to see institutions execute on a particular sequence. So what does that mean? So we're looking for an ABC move down here to hold one of these moving averages. Right now, price has moved up here above this gold, a 30-day simple moving average right here. We're looking for that simple ABC and then a retake of these moving averages. If they retake those moving averages on rising volume, showing sponsorship to the upside, and then some sort of possibly even a back test of this moving average cluster right here, that would indicate sponsorship to the long side. That would show that the higher low would be setting in here to continue on our series of higher lows and higher highs. And so we would look for continuation of our uptrend and continuation of the markup campaign from there. If we do not see that, if we do see volume expanding here and we do see a push to the downside, be watching for this volume profile to start filling out. And if it starts filling out to the top side here, we may start to see signs of distribution. That's what the downside or bearish scenario would look like. It would look like an expanding volume profile at the top, and these gaps in here would begin to fill up. Not our primary expectation, but that's what we'll be watching out for. The lesson is really clear. Question breakouts, look for acceptance testing, buy the pullbacks, buy the drawdowns. That's what we're always looking for, a pullback to confirm support, watching volume coming in at the lows. We can take our long positions at support levels and avoid chasing headlines and avoid chasing breakouts that have already happened. We don't have a position in Hood, but if we did, we would be watching for the reclaim of those short-term moving averages. We'll consider taking a position then. I hope everybody enjoyed clarity. That's all the time we've got for Hood this week. We'll see you next week.